Have you ever wondered where to start financially, or if you were to kind of look a year from today, what would need to happen for you to have a great financial kind of year? What about processing student loans and business debts? Do you ever have concerns, maybe as a business owner with your team not being cohesive when it comes to like implementing the strategies that you learn? And maybe you've got big plans in your business. You're looking to hire a new team member, or you need to get an estate plan in order for a new child that's arriving, or you need to know what you do with salary versus distribution from a tax perspective that can save you up to 15.3% on your taxes. Or what about getting a loan, or carrying back a payment so you don't have to pay private mortgage insurance? That's if you don't have at least 20% down. Or maybe get a lower interest rate in today's environment. Or what about inefficiencies? Like, there's a lot that we can cover, and what I'm going to do is I'm going to actually take you into a real live situation where I'm giving people one-on-one advice on those very topics. So if you want to get your financial house in order, take back control over your financial life, and get to the next level the next little while, this is the video for you. What would be the best outcome of our call today?
I guess for myself, we were just talking about this too, like starting point.
Okay.
And mainly when it comes to like finances and managing where we're at. I know I'm going through the Wealth Factory booklet and whatnot, and listening to a couple people talking about, and I think you said one of yours actually was, people have never paid themselves so much money in their life, yet they're still like struggling to figure out if there's anything extra. And that's where I feel we're at right now. Like, we're doing okay, but we aren't by any means stable.
Okay. So let me put it this way. Let's say we talk a year from today. What needs to transpire for you to feel really happy with your progress? Where do you want to be?
Paid off some of our student loans.
Okay.
We're talking chiropractic crew now.
And are you guys paying extra to these loans at all right now?
No, we actually we're kind of at this point where we can't really, we could trying to find it all, but like any extra money to put towards that, we really don't.
Are you paying a lot in tax right now, or do you have other loans that are, pulling out your money?
No.
Mortgage.
Yeah.
Mortgage.
I mean, general expenses.
And what's going on in the practice, and where do you want the practice to be?
Practice is okay. We did one thing that I guess set us back a little bit, but it's an investment into the building. We own the building. So we own the building as an LLC Corp, and then we operate the chiropractic out of it as an S Corp.
And have you cost segregated your building for tax purposes? Do you know what that is?
I do not.
Okay, so a building typically takes like up to 39 years to fully depreciate for tax purposes. And the philosophy of depreciation is, things wear down, right? Whether it's carpet or, replacement of structure, or, it doesn't last. And so you're depreciating that for tax purposes, even though the building may be appreciating because of the land value and over time. And so that's something you can write off on your taxes. Now, cost segregation, what it would do is it would take that and it would say, hey, some of this really is only going to last for 3 years, 7 years, 10 years. And so rather than taking that really long period of time to write all that off, it starts to collapse it so you can write it off faster.
Okay. Yeah, and that's something that we were talking about this beforehand, something we really love about the Wealth Factory. Like, we have our tax accountant and we have our financial advisor who is more traditional,
Yeah.
We have kind of been trained, but, we were really, I guess you could say, I keep using the word stimulated by when you came to talk to us. And we really resonate more with your lines than the traditional thinking. But we have those guys, but they don't talk at all. They don't even know each other. So like that whole team aspect of Wealth Factory, obviously that's something we enjoy.
Yeah, I definitely want you to look into, when you talk to the accountant, cost segregation. Because what we want to look at is how much would a study be? What's that fee? And what would the potential savings be before you make that investment? But I think it's worth looking into and might help you out a bit. It really depends on how much tax you're paying already, and if we maybe pull the trigger on that in a few years from now, or it just kind of, I want to look at it more holistically, but I want to plant the seed to start considering these things.
Okay.
And it sounds like you've got an LLC for the building and you got an S Corp for the practice.
Yep.
And you guys own the practice together? Is it just in one name?
Together.
Okay.
And are you both taking salary? Are you both taking distributions? How are you paying out of that?
We both take salary for our W-2 on that.
The student loans are obviously the biggest burden. That's the stuff that you brought up first. Mortgages, are you comfortable with those? Do you have a plan of what you want to do there?
Not necessarily a plan at this point. We just moved into our house literally 1 year ago. So we were living in her parents, actually. They had another place that we were, I guess, living in for free for a couple of years. And then we just bought a place last year. So I don't have a big game plan. We have a 5-year, I guess we bought it by the owner. So we have a 5-year period until it will balloon, and then we'll have to go to the bank for mortgage and refinance and everything else.
So seller finance deal. How long are you going to stay on the seller finance before you go get your own loan?
Well, we have 4 more years of that. And I guess, that would be more or less guidance if that's a good thing to stay on, if we can negotiate interest rate down, or at that time go to the bank and figure out what we need.
Is it principal plus interest? Is there a 30-year term, 15-year term? What's his terms?
It's a 30-year term.
I mean, here's the deal. Interest rates are so low right now.
Yeah.
So low that if you could go get your own loan, then you don't have to worry about what if interest rates go up in 4 years. And then when you go to get it, you're paying a higher interest rate than if you finance now. It's just a matter of what would that look like? The biggest issue, here's my strategy for this. If you can go to the guy on the seller finance note, do you have any hard prepayment penalties, in the contract? So he doesn't care if you just buy him out and finance.
Oh, no, I don't think she would care at all.
So here's what you could do. You could actually go and get a loan and then have him carry back the down payment, since he's already carrying the whole note. So let's say you want to go, finance this with the bank, they're going to want some type of down payment typically. Rather than tying up your cash towards that, which I think you'd rather, invest into Two Hill or in pay off student loans, you could ask the person, the seller financing, hey, what if we were to give you 80% of what we owe you now? And that other 20%, you finance to us, right? What that does is you don't have to pay private mortgage insurance that way. Because if you put 20% down on a loan, there's no private mortgage insurance, which is just an additional fee. And you can usually get a lower interest rate if you're financing at 80% or lower than if you went higher than that. So, and then you just have him be the person that funds, that holds on to that 20% of what you owe him right now. The rest would just come in a lump sum. So let me just do simple numbers. Let's say it's $100,000 we're talking about. If you went and had to finance it yourself, you'd have to come up with $20,000 down per $100,000. But what if you said, cool, we're going to get an $80,000 loan. We're going to pay our seller finance guy back $80,000, but we still owe him $20,000. But we just pay him for the $20,000. We've just reduced the note that much.
Got it. Over time. Okay. Yeah.
It's all a carry back. It's just a carry back, so you don't have to come up with your own money.
Got it. Yeah, I like that. What about that? Did you mention the homeowner's insurance?
Yeah,
Not
PMI or private mortgage insurance is anytime you buy a home, but you put less than 20% down. Most institutions charge you PMI, private mortgage insurance, which is, hey, because there's not enough equity, they're taking on more risk, so you have to pay this fee that they insure themselves for a higher potential default rate or less equity if there is a default.
Okay. I'm going to have to process that for a little bit.
So just think about it like, hey, the bank goes, if you give us 20 grand right now and we give you 80 grand, we're good. We just charge you the interest rate. If you give us less than 80 grand, we have more risk than we're comfortable with because there's not enough equity in the home. And so there's going to be this insurance policy to insure us in case of default, because by the time we sell that home, we're at a loss because of the closing costs and the carrying costs and the et cetera. So it's just a kind of a standard practice in the mortgage industry or in the banking industry.
PMI is on the 80%.
It's anytime you have less than 20% equity where you haven't put down an 80, finance more than 80%.
Got it. Now that makes sense. But you can still split that difference and it's actually going to cost you less anyway, even with carrying that insurance.
Yeah, and if this guy can actually just say, if he's willing to take a second position, that's his disadvantage. Right now, he's in first position. If he's got
She's pretty smart too, and she knows that.
Yeah. So, if you have this person, if she carries back that 20%, she might want a higher interest rate because she's now behind the bank in default.
Yeah, but you're basically splitting up the lump sum loan and you're
Yep.
getting the rates, so you're actually saving. Got it. Okay.
And some people actually just do that with the bank. They get a first and second mortgage with the bank. The first mortgage is a lower interest rate than the second mortgage, but avoids private mortgage insurance. And so that second mortgage, paying a higher interest rate, might be a lower price than paying for that insurance.
Got it. Okay. Yeah, cool. I like that.
Yeah.
What other thing, you say 1 year from now, looking ahead, one thing I'm not comfortable with is our savings right now. So
Yeah.
like legitimately, we have, I would say like 1 month's worth. Like if we were to really, something happen, which granted we have some other things in place, I guess you could say that we'd be able to pull from, but what I want to have in the savings account is definitely not there.
Okay. And do you have any automation where every time you're taking a paycheck, a certain percentage is going somewhere?
The 18%.
Yeah, that's a big percentage, but maybe cost segregation helps us get there. Maybe, a couple other tax strategies with the kids or something can reduce that burden.
I don't have a select, I do have a sweep account for the business that I pull a select amount every single month or every single week, but not personal. So I think part of that too, and I don't want to be making too many excuses, but it kind of comes down to I just don't know where I'm pulling that from.
Yeah, so here's where I think we pull it from. We got to save some dollars, right? We just got to, from inefficiency, not from you guys pulling from your lifestyle, but from if that cost segregation strategy could lower your tax bill, if paying your kids could lower your tax bill, if using your house for the Augusta rule where you're renting out your house for 14 days to your business per year, those are 3 ways that we could maybe cut your taxes in half, right? And then all of a sudden that tax savings goes into that account for you and helps you boost up your savings.
Yeah. Well, I'm curious to see the 3 years. We got to get with the tax. Is it a tax strategist?
Yeah, it'll be a CPA, but they're tax strategist focused. Yeah.
So see where that comes up. Because that was the guy who asked the question too. I'm pretty sure we have a really good CPA, but I am curious to see the 3-year audit, more or less.
Yeah, and there might be based upon things you built for your business, there might be some credits or rebates or something like that, whether it's websites or, customer CRMs within the business. There might be some things to look at there, but at least there's a couple new strategies moving forward that I think that will save you some tax too. A little harder to get money from the past 3 years than it is just create new strategy, but it's still possible.
Yeah. Yep.
I think so.
I got one more question.
Okay.
Personally, when you get in a little bit of a funk, because everybody does, what's your best strategy for snapping out of it?
All right, two things that I do. Number one, I call a mentor, and I just am really open with them that I'm not in the best place, right? So that way they can ask me questions I don't know how to ask myself. And a lot of times they'll even create accountability. They might text me or check in on me or get me committed to something. The second thing is I just call those high energy people that I know I can create value for. And then I get on the phone with them and I just look to add value to their life, because then I get excited about it. And then, they come back and, appreciate me and acknowledge me. And then the third thing is I just do a lot of meditation, where I do a lot of just being grateful and what's everything I could love about myself. And I just spend some time in the morning doing that and just trying to love everything, the perfection and the imperfection, the greatness and the weakness, and just kind of go through that. And I just regularly am doing personal development stuff. I just did a 6-hour therapy session yesterday. It was phenomenal, just really working through stuff. And then I just like having a daily ritual. So that way I kind of start my day with a little workout, little reading. In this morning, my whole education and reading was around whiskey. So it wasn't anything oh yeah, I'm learning finance. It's just no, I want to learn about something. So I was learning about whiskey, and then usually some gratitude or meditation. So if you start your day that way, it helps out. If you talk to people that you if I wanted to stay in the funk, I'd call my mom and she'd just tell me it's not my fault, right? But if I want to get out of the funk, I'm going to call those people that I would consider mentors that are going to call me out on my stuff, because you're right. Everyone has those things happen. And I had a client today that called me, that I've known for a long, long time. And he was like, dude, I'm struggling. And we spent 15 minutes and I asked him questions that no one else was asking him. And I helped him identify where a lot of his pain was coming from because of associations of things that happen. And we haven't got to the bottom of it. I need to call him back. I just have so many calls today. But I was like, I could tell he thinks of himself as his business. One of his businesses isn't working out. He's worried about the pain he's going to cause or what that means about him if it doesn't work the way it was planned. But I can look at a non-emotional outside perspective and ask him different questions. So he's going to get past that funk a lot faster.
Got it.
All right, guys.
Cool.
Have a great
Thanks,
one.
Garrett.